We're continuing to get earnings from some of the biggest names in the financial sector. We have positive numbers out of China. We are seeing all sorts of shenanigans in the crypto space. Cannot wait to get into all of that on today's show. Before we hit that like button for me, subscribe to our channel, drop a comment, say hi, whatever you want to do there. All support is appreciated. As we get into today's show, just a quick friendly reminder, we are not financial advisors. Nothing we say is financial advice. Okay. We are two guys who love following the markets, nerd out about this stuff. So we figured, hey, let's just do it live on a show. So please do all of your own research before you perform any buys or sells. Kevin, we saw some data this morning from B of A, from Goldman. We saw China come in with GDP over expectation. Like I mentioned, we are seeing a lot of craziness in the crypto market. Want to discuss some of like the traditional financial market sentiment as well among both institutional and retail investors. A lot to get into today. Where do you want to start? How you feeling on this Tuesday?
I feel great. Again, this is just an exciting time to be here because we're seeing people split like right down the middle. Not sure how the market's going to go. We can start in TradFi. I mean, I'm super cool that we just talk about that real quick. Nothing too crazy
Let's
to
do
talk
it.
about there, but it's definitely some info that was interesting.
There's definitely stuff to talk about. So let's start with some of the earnings. We have this morning, Goldman reported their Q1 earnings. Revenue was 12.22 billion, came in under expectation by about $500 million. So not great. We have earnings per share there of 8.79 versus estimate of 8.10. So overperformed on that front. Big thing with Goldman is that they are, most of their revenue comes from trading the markets. So as the markets go, Goldman tends to go unless they're, really outperforming it like crazy. We then had Bank of America. This is the one that I think is really interesting, and we'll look at I think what we should do is let me talk through this. As I'm doing that, you get the chart ready, and we'll look at the chart right off the bat there. So we had revenue come in on Bank of America, 26.39 billion, came in beat estimates of 25.13 billion, earnings per share 94 cents versus an 82-cent estimate. So both solid numbers on that standpoint. Now, here's where I think B of A could be still way overvalued and why I think it's going to take a hit. Net interest income jumps 24%. So it's at 14.4 billion. And that is a result purely of high interest rates. We've seen interest rates high. So Bank of America is making more money from that standpoint. Now, we also got an announcement yesterday from Apple that they are going to be releasing a high yield savings account. I believe it's like 4.15% you can get on a savings account there. So one of two things is going to happen with Bank of America. Either they're going to lose a bunch of people because they're not willing to go up from like a 0.4% savings account. So they're going to lose a bunch of people to Apple, which is not good. It's going to hurt the bottom line. Or they're going to be forced to be more competitive with their interest rates, which means they're going to make less money, which is not good for the bottom line. So either way, not good for the bottom line. That is what I'm viewing it right now from a Bank of America standpoint. I know that is looking at like kind of the macro, and the technicals don't line up with it being very good either. And those two lines coming together, I know that always gets you a little hot and bothered there, Kevin. So let's talk about it.
Yeah, it's a little too close for my liking. Again, this 50 came down way super fast because of the fall of Silicon Valley and First Republic and a bunch of those other banks that collapsed back in March, but luckily someone picked them up, Credit Suisse included. Point is that 50 came down, that 200's right there, and that's probably the closest I've seen to any of the banks yet that since the collapse, are that close to crossing. That's the 15, that's the 200. And if we look on the weekly, it's been moving to the upside pretty well. So maybe and it's the other thing that's kind of a little freaky. We're seeing volumes drop significantly. So we're seeing price push up, volumes drop. And if we look on the daily, I haven't checked that yet. We're overbought on the daily. And it looks like we're going to find some projection right here on the 50 moving average on the daily. So more downward price action seems inevitable. And that would ultimately bring that 50 on the weekly below that 200. And we all know, because we always talk about it, that is considered a death cross. And usually you see those when we're in bear markets. And that's usually it's a capitulation afterwards. So when I'm looking at this, even though it's came down a good amount and with all the macro, info you've displayed, obviously with high interest rates from the Fed, you would think that people have savings accounts with banks, they would see some of those interest rates transferred over. Unfortunately, none of the banks are really doing that. Bank of America is one that definitely definitely is going to suffer from this new Apple announcement. Again, it's kind of interesting. Apple, I mean, they've already had a foothold in the financial markets with Apple Pay and stuff like that. But they're taking a pretty good stance here. It's going to hurt a lot of the traditional financial institutions, Bank of America, J.P. Morgan, all of these. So it'll be really interesting to see how this plays out. But I think we know how this plays out. This is like knowing how the story ends, and you're on the final page right before. That's going to cross. It's not going to be great, and yeah, Bank of America is going to suffer either way.
Yeah, I hate these big financial institutions who have these just come get 0.1% on your money in your savings account. Like that shit pisses me off so much. I think whoever created that and grew that is one of the biggest crooks in modern history. I mean, listen, they're never gonna be charged. Like it is what it is. People are free to do with their money what they will. It also shows the lack of financial literacy that people will put their very valuable savings into something that earns them next to nothing. Mm-hmm. So I'm excited that we're seeing somebody offer a high yield savings account. I think it's going to be good it's not going to be good for the banks, but it's going to be good for the health of the consumer, which is overall a positive thing. So I do love to see that. I want to talk real quick. We also had Q1 GDP and retail sales data coming out from China today. GDP in China grew 4.5% in Q1. That was beating estimates of 4%. Retail sales came in very high over there, 10.6% increase in March, beating estimates of 7.5%. So a lot happening in China. I'm not, if you want to take your political views out of it and invest in China, you can do that. If you don't want to take your political views out of it and not invest in China, to each their own. I think there are other opportunities, though, as a result of China's growth in Asia, whether you're looking at Korea, Indonesia, India, a lot of these markets that we've briefly talked about before, I think are very, very interesting. When we see the recovery that China is seeing, I would expect a lot of the neighboring countries, hopefully, to also have a strong recovery over the course of the next year, much stronger than what I expect the USA is going to have.
I completely agree. Again, it's a lot of people are very sensitive when it comes to China, but at the end of the day, they did do what seems like so far it's been working pretty well for them. They did open up from COVID, reopening pretty well, and their markets are showing that they're pretty strong right now, especially comparative to the United States. I don't think there's a ton of concern necessarily for the Chinese markets. Maybe they're into a bull run while we're into a recession. Who knows? But again, I think the Asian markets are definitely going to see, significant growth over the next 10 to 20 years for sure, especially as we start to see, tons of issues and concerns with the U.S. and the dollar. Even though the dollar, I think, is still strong, it's a good chance that, some of these other emerging countries start taking a better stance in the world economic markets.
100%. I think you can add some of the South American countries to that as well. If you want to look at Brazil as another option too. I mean, there's so many opportunities out there right now if you're willing to look outside of the USA, which I think you absolutely should. Ace, we're going to talk about meme coins in a bit, I suppose, Ace. But let's get through the other stuff first. That's everything I want to talk about on, from the numbers standpoint. I do want to get into a little bit of the market sentiment right now because it feels like people can very easily be swayed in either direction.
Yeah.
We saw a report from Bank of America's Global Fund Manager survey showed that equity allocation relative to bonds is at its lowest since the 2008 financial crisis, which is pretty interesting. So a lot of retail investors, and maybe this is the time that retail is right. Like retail is going to win some for sure. And maybe this is one of them where a lot of retail investors are more heavily weighted toward bonds. They're still, pretty heavy on equities overall. But is that a potential indicator that maybe this market is going to continue to rally a bit more as market makers move toward equities, whether it's to, try to entice people to come out of those bond positions and then send the market down, or however else you want to view that. But I do think it's interesting to kind of discuss the sentiment in the markets right now for the retail investor.
Yeah, definitely. It's I think a lot of people are just maybe scared still. Like they're afraid to do anything. And that's very, I could totally understand that. We have everyone from people in suits on Wall Street talking about how the market priced in the current recession, the one that they won't admit we're in. They priced it in last year in March, since March of 2022. And now we're just into this bull run because markets are forward thinking. I don't necessarily agree with that, but there's also the other half that are saying that, this is going to get way worse. And that's, everything from printing the most amount of money in the entire United States history within 1 year, and then obviously closing down the U.S. markets for, I don't know, for an entire year, with lockdowns. Everything is just adding up to a point where it's finally going to break. And we're seeing, high consumer credit. We're seeing oil rise up again. We're seeing tons of things that are just culminating in what people are calling an early victory against inflation too. Like, again, energy is one of the most important things that the Fed likes to look at. And if the United States continues spending too, and it most likely will, and we have that ceiling coming up in June, I think that's when they are also announcing it, or they have to fund it by, it's going to be an absolute shit show. So people are not really sure which way to go. Is it going to get really bad, or am I going to miss out and it's going to be a great bull run? And you have to have that type of mentality of like, okay, can I look at the data? Can I also look at the news, the headlines, and can I sift through what's right, what's, tradition, what makes more sense? And that's ultimately what people are going to have to do. I don't necessarily think that retail really knows what's going on. I don't think Wall Street knows what's going on either, though. I think there's a lot of absolute either stupidity or just, people are just not sure which way to move. That's why I think everyone's scared still right now.
Yeah, I think it's an interesting time for those who are still looking to, for the people who do have their money in order, who aren't carrying a lot of debt, who are continuing to have steady jobs and can put money into the markets, but don't want to do a lot of work in the process. Like, they don't want to go through having to research all these different companies. I think for a lot of them, like, you miss a big chunk of the returns at the start of these rallies. Mm-hmm. And so, like, do you just continue to dollar cost average into your retirement accounts? Do you do it through mutual funds, index funds, a little bit of allocation into crypto? I'm not sure what the best approach is. It seems like things are, we've talked ad nauseum about some of these bigger tech stocks like Nvidia and Tesla and Facebook and the insane rallies they've been on since the start of this year or late last year. And that has been a big part of what is carrying the NASDAQ altogether. I mean, NASDAQ's up 20%, but a big chunk of that is made up by a handful of tech companies. And that's not a great position to be in. And to me, that doesn't signal that we're in a wider stretching bull market. It, to me, is like, okay, a few of these got hit way too hard and now they're bouncing back, and the market as a whole is not in a place to recover to that extent. So I think that you should still be hedged somewhat. Like, that's the way I'm at. I'm not selling anything because I don't want to deal with taxes, which, I hope you got your taxes in today or got that extension filed. But at the same time, I don't feel comfortable buying at some of these valuations. So it's a really weird spot to be in.
Oh yeah, 100%. I mean, everyone knows where I stand. I think that this thing is going absolutely down. I think we're at a local top. If not, we're extremely close to one, and pretty much traditional financial markets and crypto markets. I think maybe this is controversial, but I think that the crypto market will probably put in the local top before traditional financial markets will. And that just seems how it plays out most of the time. I think that we're going to see, massive downside. And for me, I'm positioned to the point where I'm in massive shorts. I just think that's probably the most likely play. Could I absolutely be wrong and it goes up a little bit more? Yeah, for sure. But the key to all this that I'm seeing both in traditional financial markets and in the crypto markets is how low the volume is. I think we're seeing extreme manipulation. And if we were in a bull run, we would see massive volume. We would see people buying. We'd see tons of, retail institutions coming in, putting in fat orders. We're not seeing those orders come in. We're seeing, if anything, people leave the markets. And again, we have blockchain technology, so we're able to see when those wallets are selling and buying. And we're seeing massive sell orders and tons of supply being added to these exchanges. You don't usually add funds to an exchange unless you're planning on selling or, shorting a market. Because I was telling you before the show, we're not seeing the price of Bitcoin move up too much in one direction or the other. It's kind of like staggering. And I think that's because not only are we at resistance, but we're also at a point where most of the institutional money has left the space. And if you do start to see, tons of Tether or tons of USDC enter these exchanges, most likely they're just putting in future shorts and they're just going to short the market as much as they can because they know the direction of the market. They've made it, and it's to the point where now they're going to make it on the way down too. So that's the game we're playing. But again, it could be, you could be wrong in the short term, but be wrong in the big picture. It's kind of a scary thing to think about, but you just have to position yourself well and make educated, decisions. Like for me, low leverage. That's the easiest way not to get destroyed in terms of liquidation, but at the same time have the most opportunity of, making some money on this downside, because there is money to be made if it, goes tits up, like we always say.
And tits up it will go. Let's talk a little bit. Our buddy Ace here mentioned Pepe to the moon. We have the meme coins out there. I was told on a comment yesterday that I shouldn't say shit coins so much.
I saw that too.
I'll say shit coins if I want to say shit coins, but we can call them meme coins as well. We've seen Pepe. We've seen what was the other one? Wojak.
Wojak.
God, we're seeing all sorts of shenanigans. They're seeing pumps. They're seeing a 48 to 72 hour pump, and then it's kind of dying off. And to me, that doesn't signal that we are back in a full blown meme coin season. We had Link go on a nice run. That's certainly not a meme coin. That is a legitimate token that has a use. But we're seeing some of these tokens, kind of start to putter out a little bit sooner than I would imagine if we were in a full blown bull market. So that's another indicator to me that, like, okay, it's nice that my DCAing of Link has turned out well so far, but I'm still very bullish on it long term. And I'm hoping, and I feel good about the fact that I'll get to buy in at lower values here in the coming weeks and months.
Yeah, definitely. I think there's going to be tons of wonderful opportunities. And I think this is the turning point where we're going to start to see, hopefully, some really good discounts on a lot of these. Again, with the volumes being so low, once people start selling, that stuff's going to start ripping to the downside. So it'll be interesting to see how some of these alts react over the next few weeks. Do you want to take a look at something important?
Yeah, absolutely.
All right, let's look at the DXY, our favorite. And I think this is another huge reason why we're starting to see some of these pullbacks too. It's because the DXY is actually extremely strong. This is the 1 hour. I don't want to look at that. I want to look at the daily. Yeah, so this is the DXY right now on the daily. Again, we talked about this double bottom scenario. So we found support on this white line. We got rejected here at that blue line right about 102.035. And we came down. But at the end of the day, we're still trading in this little parallel channel, not parallel channel, but like this this trend line that, found support here, fell below support, found support here, and then we broke above it, and then we're just kind of trapped. And it's almost like a triangle that we're trading in right here. It's going to break out one way or the other, but maybe in the daily it consolidates, kind of coils up in the next few days. But when I look at this weekly, there is tons of room to the upside for this. Again, we're just waiting to see it finally react. But since the DXY is still fairly low, that's probably why we're seeing Bitcoin able to push to 30,000. That's part of the manipulation right now, where it's not actual volume that's driving the price. It's actually just, the DXY dumping. So risk assets are going to pump. But now we see the DXY kind of stepping up a little bit. People aren't really sure which direction this is going to go. We're starting to see some of that pullback. And that's why it's, you got to look at more than just the charts and what people are saying on Twitter, because this is going to play a huge factor in the coming months, especially if this does rip into the summer. Then your altcoin season is pretty much decimated. Once the dollar starts pumping, these alts are going to absolutely just get shit on. I'm just being honest. I can't be any more blunt than that, but yeah.
Yeah, I think you're spot on there. We talked about the run we've seen in crypto since SVB went down. Bitcoin led the way, ETH trailed it, the alts trailed that. The memes are trailing that, and it seems like the wind is coming out of the sails for all of them as the DXY found, what looks to be a local bottom, begins to recover from there. We're lining up too. We're only a couple weeks, left in the month, getting close to May when everyone sells and goes away. it's everything's just lining up right now for us to feel some pain here over the next few months, and I think that's what that's what we're gonna see happen. So, any other charts you want to look at? I know we covered a bunch of stuff yesterday, but any other charts that you think are relevant right now? We have seen, like I said, a run up in natural gas in a big way since last Friday. I believe it went from like a buck 89 to 220. What's that? 232 right now. So a big run up there. We've seen oil take another spike up to just shy of $83 a barrel. So a lot going on that side as well that we thought, after the OPEC plus news, we were like, okay, well, these are going to take a big run up. It didn't happen immediately, but it's happening now.
Yeah, that natural gas is still one that makes me hate the fact that the United States is such a regulated market, because the only way I could have bought a futures contract on natural gas is if I went through like the New York Stock Exchange or something. It's just where I needed a broker. And I don't like to have anyone, no middlemen. That's why I love crypto. Obviously, maybe the exchange is the middleman, but point is, natural gas, I still think is going to be an absolute tear into the summer. I think that thing's going to rip up like insane. Still, I'm super bullish on that. I'm super bullish on oil, especially going into the summer. So I'll digress, but I'm a little upset about that because we called those on the show weeks ago, back in like March, I believe.
So I was out of town last week and I went grocery shopping today for the first time in 2 weeks. And the prices of everything is like at new highs.
Yep.
At least around me, which I saw that like a gallon of milk and eggs were back. I'm like, what? I thought inflation was over. Apparently it's not, Kevin. So I think we're gonna start to see, and that is one where when they do the core PCE and the core CPI, they strip out those numbers, yada yada. But that still impacts things, and I think we're going to keep seeing food going up. Like the Fed is just losing this inflation battle. It's going to be seen as well in the energy costs over the coming months. It's not a good look right now.
The Fed literally said, "Start fasting, bitches." It just seems like how it is. I've seen the price of things going up too over here. Gas is one that is definitely going up a little bit. I think it's going to go up a lot higher. But yeah, I mean, this is far from over. Like we always say, the fight from 9.1 to 5%, way different than 5% to 2%. Got to throw in those big rates. Got to throw in those big rates if you want that price to come down, and you can't take your foot off the gas, which seems like they might have done a little bit in the past few months. But let's get into something that's more crypto related, Bitcoin dominance, because tons of people had given up on this, and that's why they think that the altcoin season is here. And again, I'm talking nonstop about the altcoin season because that's all I'm seeing on Twitter, and this will absolutely get people right because I think it's an altcoin exit pump, if anything. We're looking at the BTC dominance, and this is the daily. Okay, so maybe I shouldn't have looked daily. That zoomed out. We should look at it like this because this is how everyone is viewing. This is how everyone's viewing Bitcoin dominance. Like every chart on Twitter is literally like this. It's like, oh, you guys are fucked. Bitcoin dominance is going to shit. Okay, let me just zoom out a little bit. All right, this is a period of time. Here, let's do it. Let's say from like right here to here. That is 149. So 149 days, the Bitcoin dominance has been climbing. And you need to remember that after a massive move to the upside, there's going to be some period of time where you're going to have to trade sideways. Obviously the price of Bitcoin, this is going off its market cap. And we have to see that, okay, Bitcoin cooled down a little bit right here, even though the price is pushing up. Some of the alts were going up at this time too, because this was after the start of the year. You saw the pump in the beginning of the year. Sideways trading, and then once again, right after SIVB, that shit just shot straight up. Bitcoin was going insane, went nuclear, went from 19 to 24, went from 25 to 19 to 20, 19 to 24 within a day and a half. So it was huge volatility. So obviously the price is going to go up as the market cap is expanding. But again, there's consolidation points after these massive moves to the upside. Right now, we're seeing a little bit of a cooling off period. Right now, we saw it back here in December. We shot up, then we came down a little bit. Then we shot up again. Then we came down a little bit, traded sideways. Then we shot up again. And, maybe this is a cooling off consolidation period. Daily stochastic RSI looks completely oversold to me. So definitely some good room to the upside. And if we look at the weekly, it's extremely overbought. I will not negate the fact that that is extremely overbought. However, these things can stay overbought for a period of time. Obviously we thought, okay, we're overbought here. It's going to come back down. Nope. Decided to stay up. And look how fast it shot up here. It shot up from 43% all the way to about 47.40, which is currently where we are at, about 47.379 right now. But the point is, this thing can move fast without you even knowing. And does this make me feel that it's still possible for, Bitcoin to shoot up to 34,000? Yeah, I think that it's still possible if we're talking about a manipulated market. I think that if everything lines up over a short period of time, there could be one more squeeze to the point where we get up that high, and then Bitcoin dominance is at 50%, 51%. It's very possible. But it's still holding strong when you look at this, zoomed out. We had this massive red candle back in June of 2022. So we made all this progress here. And then we just got one candle that pretty much took out half of that entire move to the upside. Here, we haven't seen that yet. We're not even close to seeing that. We're just seeing a little bit of if anything, we could even say that this is putting in lower lows and lower highs. And that's 100% parallel channel. That's a bull flag, and that could push up again. So we just need to be careful here. I think a lot of people are getting overly excited and confident in the fact that, okay, money moved from Bitcoin to Ethereum, and now it's got to go to altcoins because, Wojak's out there, and Wojak just has to pump. So I'm really not too concerned with this. I feel confident entering shorts because Bitcoin dominance is still extremely high. I don't think that there's going to be any unlimited potential for any of these alts. A few might get through. I don't know. Some of them were seeing some pumps the other day. Who was it? BNB, but that might be because obviously CZ had something probably to do with that. But point is, I think that there's tons of support for Bitcoin dominance right here. I think that there's just going to be one last push to the upside, and that's going to be the end of it. And when could that happen? I don't know. Maybe in about a week to 3 weeks.
Here's the thing with Bitcoin dominance from my perspective, and where I think a lot of people get themselves trapped, is they interpret what you're saying when you say room to the upside and bullish for Bitcoin dominance, as in it is bullish for the price action of Bitcoin, and they don't stop to think that Bitcoin dominance can go up while everything else price wise goes to shit. Like, I think too many people will want to interpret that as, oh, he's saying, like, people who talk about Bitcoin dominance, like, oh, that means Bitcoin's going to 40. It's like, no, maybe Bitcoin goes down 20% while everything else goes down 40%. Exactly. Then Bitcoin would continue to establish dominance. So there's a lot more to it than just, oh, price goes up on Bitcoin more than on the other stuff.
Yeah, and 100%, I couldn't agree more, and it's a good point to bring up. And it's also, this isn't necessarily, I don't look at this as a way we trade or we look for support and resistance at certain levels with Bitcoin dominance. Obviously, it's a culmination of a lot of factors. We talk about market caps of other coins, the market cap of Bitcoin, Ethereum, all that shit plays into this. And that's why, it just is going to, it's something that we gauge. It's almost like looking at temperature. It's not necessarily something that you say, oh, okay, just because it's here, that means the next pump's definitely going to bring us up to this level here. No, it's just something we watch over a period of time. Now, is it good to see that, we made it up to at least this last high that we had before the breakdown? Yeah, I mean, obviously that's probably the most likely target, but it's not going to be, the end all be all. The price doesn't correlate to where it is then to where it is now. Similar, but it's not identical. So yeah, it's a great point. And this is just a tool, like many other things, to see, how much power does Bitcoin have over alts. If more of the money is flowing into Bitcoin, that means there's not going to be a lot of money in other alts. So if Bitcoin does decide to dump, those positions that are in alts are definitely going to dump with it. It's really interesting to see, but I just don't see a world right now where alts are going to take off with Bitcoin dominance still being this high. I'm not giving up on it. I still see one more move to the upside on this chart. And again, that could be Bitcoin dropping down $1,000 while everything else drops, 15, 20%. It's very likely that could happen. And then if that happens and Bitcoin decides to dump more, everything's going to bleed even more. So it's really interesting to see, but this is the one thing I'm watching more than anything out of any of the other charts, because I think we are at that local top, but we'll see.
Okay. I think that is a good place to wrap it up for today. Thank you, everybody, for watching. Great show. Of course, I'm going to say it's a great show. I'm fucking on the show. But I think we covered some good stuff today around earnings, around what is happening with market sentiment. And I think a lot of it is also backed up with technical analysis. So pat ourselves on the back real quick. Good show. Thank you, everybody, for watching. Hit that like button if you haven't. Drop a comment. Tell us if you think you're right, if you think we're right, or if you think we're full of shit. Spread us out far and wide. Subscribe. All those good things. We're trying to put out, we are putting out content every day. Trying to do the best we can. always looking to improve. So appreciate everybody for watching. We'll be back tomorrow, same time, same place. Kev, I will see you then.
Let's get fucking rich, not financial advice.